Four lies that we tell ourselves. Welcome to this week's edition of Friday's Food for Thought. Spend enough time in any given profession and you will fall into the trap of deceit, not deceiving others but ourselves. Now, there are a number of lies that we can easily tell ourselves about working in the reverse mortgage industry that will affect our outlook, performance, and sense of well-being. Number one, the program's reputation is damaged beyond repair. Now, the best lies are rooted in half-truths. Now, most certainly, most can agree that the words reverse mortgage often elicits a negative response. A misinformed media, sensational stories about displaced borrowers, and the occasional fraudsters are the typical stories that damage the reputation and the public perception of the program. But unfortunately, many have equated a reverse mortgage with the cheesy late-night infomercials, ill-prepared seniors with no assets, and as a loan of last resort. Some of this perception can be attributed to self-inflicted wounds, as evidenced with the former fixed-rate full-draw HECM and also loan officers who removed younger spouses from title, creating a problem down the road. The truth is that we have an opportunity to rebrand the home equity conversion mortgage as an equity management tool for older homeowners of all walks of life. Number two, the good old days are behind us. If we take the short view, most certainly the best days of the reverse mortgage program are a memory of years gone by. However, if one looks at the exploding senior population and lack of retirement preparedness, perhaps the best days are yet to come. The home equity conversion mortgage program follows the ebb and flow of the housing market and the economy, just like the traditional mortgages. Now, we must not let the impact of a historical housing and economic crash taint our long-term perspective. So keep this in mind when comparing our endorsement volumes of yesteryear to today. Number three, there's a quick fix. Now, one would hope that a simple national public service announcement similar to Got Milk would snap and awaken the public to the truth of the reverse mortgage program. But the truth is that the ongoing battle to win the hearts and minds of consumers lies with HECM lenders and loan officers. It is here that we can provide a marketing message that avoids cliches and appeals to those who are simply broke. Loan officers can now begin to reinforce their role as a mortgage professional by approaching each borrower's situation in a thorough and holistic manner. Now, such a counterintuitive product as the HECM does require a more sophisticated approach than a mere commodity alone. Number four, we are helpless. Now, this is perhaps the most dangerous fallacy of all, as it erodes the very core of our motivation and belief. Not surprising considering the sense of a lack of control being a government-managed program. Now, while we cannot personally shape the policies of HUD or FHA, control negative press, or directly win the hearts and minds of lawmakers, we are not helpless. Each of us has a sphere of influence. As each of us educates to local media, financial advisors, and senior homeowners in our city, our efforts are multiplied several thousand times across the country. Yes, a grassroots effort. Now, each of us should not only see ourselves as loan professionals, but as evangelists seeking to challenge, motivate, and influence those around us when it comes to the reverse mortgage. Now, what are your thoughts? Leave your comments in the comment section below and have a great week.